Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's morning call. It is Thursday after Wednesday's wild ride. I'm sure if you read newspapers, blogs, everyone talked about how much the markets were down and the size of the recovery from the lows. And pretty much that's been the only way this market's been able to rally is from deep in the hole, because we've been stuck in this somewhat of a downtrend since starting 2016. So the question is, will that change, and how can you continue to maneuver it? So yesterday, with the big reversal on the heavy volume, you would think perhaps, that could relieve some pressure and we can get a few days of upside, because the Dow is still down, I think, 250 points. It just wasn't down 550. So anyway, you look overseas to see if yesterday meant anything to Asia. Asia started higher and closed on lows. I think the Shanghai down 3.2%. The HK was down, the Nikkei lows of 2016. So the futures that were up last night are now down about 8-9 handles because, Asia is still weak. As of right now, Europe is up small. They have their ECB and Draghi today. We'll see if that could bounce and figure out how that affects our markets again. So, today, oil is a little bit lower again, and the market's been so focused on that. And the futures are down 8-9 handles. So the question is, can there be any commitment to yesterday's move, and could you buy some things down small today, or down a little bit, to go green and get a little bit of a push, or maybe even a little bit more than a push? So the question is, again, was yesterday constructive for the bulls or for a potential rally, or was it destructive that, all of a sudden today the market forgets and we go back down to the lows? And that's going to be the thesis for the day. If you look at the SPX, you'll see that, the market undercut this area. It undercut the lows we were looking at, which was right around here, and came well off the lows. So the question is, can it hold higher, and build a little bit more on this floor? So really what you want to do is you take a look at the 5-minute, because you want to see where support was from yesterday. This is like what I did in my morning note today. I wrote down all potential spots that if the market is any good, perhaps it tries to hold. So I would think if the market is any good, it would hold somewhere between this level here. This is where it spent most of the afternoon. Okay, here was your igniting bar, here was your higher low, and then this is when it consolidated for about 2 hours. So if buyers want to come back in here, and if they feel like they missed this move, this would be somewhat constructive to hold. Anywhere between this, 1839-ish and 1840 or 45. So this is that kind of spot. If you go to the spiders real quickly, I'll show you the same type of chart. Basically, this is your chart from yesterday. Here was your igniting bar, your high or low, and this is where it spent most of the time. Okay, spent most of the time in the afternoon consolidating the move off the lows. So I would think if this market's any good, it doesn't go much below this. Obviously, the market's pushed around, pushes everyone below where it should go, et cetera, but they want to kind of make it easy. We hold this area and try and come back up. And if for some reason, we hold even a little bit higher, this is resistance to see if we can actually get a push above a prior high, which is 187.50, which hasn't happened. So I think if you sold into strength and didn't take a lot of overnight risk, perhaps this is your spot. If you took a little overnight risk, here's your spot to add to it. And let's hope that this doesn't hold, because if this were to break, I would think that people would just get out of the way, and then all of a sudden we have to, see what happens again for what's been a lot, of 2016. As far as oil, there's an oil number at 11 o'clock. It was still heavy yesterday, came a little bit off the lows in the afternoon. I'm thinking that, the numbers are probably going to be bad, but the question is, does it bounce off that, and is it sold out? And if it bounces off that, that could probably help, for a little bit of higher prices to continue with the trade from yesterday. If all of a sudden inventories are friggin' high again and the oil gets hit and makes new lows of this week, it's going to be really hard for the market to rally. Yesterday, the XLE was probably one of the last things to rally. We'll go back to the daily chart on the XLE. If you look here, it gave you a bottom tail. So I guess you could trade versus this. Things have been so battered and bruised. The last down move, came when it triggered below this, and then when you lost the threshold support, and it's been controlled by the 8-day, but it is a little stretched below it. So I think people who are playing this market long are only trying to play things back to the 8-day. So there's not a lot of meat on the bone. Maybe one time the 8-day breaks and it tries to get up to the 20 one day, but that hasn't happened yet. You'll see in most daily charts, everything's been controlled by the 8-day, so when it gets so, stretched lower, there's a better potential trade than as you get closer to it. And then I guess the dynamics of the market can change if you actually break above that from some price that's low enough to give you a break of a descending channel to then get that relief rally, but that hasn't happened yet. Some of the stronger charts, or patterns like from yesterday, the IBBs. Okay, the IBBs were the first to go green yesterday. Okay, it's still, technically on a macro sense, very broken. Okay, needs a lot of time. It broke this ascending channel, broke this ascending channel, broke this ascending channel. So all you have here is it trying to take back, the 2015 lows. But yesterday for a trade, it was a good trade around the pivot. So if you come closer here, that's how you have to separate it. You had, this red dog reversal around this pivot here, which was 273. If you bought at 273 and put a stop at 268, 5 points, you were able to make 12 or so. So that's a nice risk reward. So for today, to see if there's any commitment, to yesterday's move, the same kind of concept. You go to your 5-minute chart, okay, and see, where there is support, from yesterday. So as you can see, this was a lot stronger than the spiders because it actually, went into the gap, took it out, and had a big rally, got above prior resistance, stayed above it, gave a little follow through. So I would think for today, if it could pull back into this 280 area, okay, 281, 280, that would be $9 or $10 off yesterday's high. That would be a spot to look at. And then I guess, if you want to do from here to yesterday, and some guys would probably use the Fibonacci's, like my boy BP. He would go like this, go all the way up, and then you would see that if the IBBs are going to be somewhat strong, this would be the 0.382% retracement, which is right here. But if they want to push the envelope, the 50% to 279, and then the 0.61 is all the way down to 276. By this point, anyone who's long from overnight will probably be hitting it out. So support 1, 2, 3. This spot would be constructive and make it easier to buy a dip to go green. If it holds actually higher for the first time, maybe it has a better chance of going green. If it just continues to break lower and then you go here, maybe you just get a small bounce and it'll be feeble. And that's pretty much what's happened. Every time you've had this move and you figured, can it hold higher to keep some buyers interested, they've just failed. So the IBB, which was one of the strongest sectors, looked to that and maybe write down those prices I just showed you. IWM, very similar also. IWM yesterday actually went green, and pushed. It's been battered and bruised. Here was your igniting bar. Here was your higher low, and this is when you really could have had a nice calculated buy. Pushed all the way to 150. So the question is, can this 98-ish be buyable? 98 or even, into 97.50. So I would think that this spot could be buyable to get some continuation. You had a pretty big hammer yesterday in the daily on some massive volume, so you would think that you probably, hopefully could buy a little bit in the hole for it to maybe try and come back up. But again, it's been below the 8-day moving average and it's in a downtrend, and it's been in a downtrend since breaking below here, which was one level, and then your next bull, your bear flag right here, there. And then obviously when it broke threshold lows, it became even more of a sell. So at here, maybe there is a bounce back up. But that bounce back up has not materialized yet, especially in strength. So we'll see what happens today. If you could buy the dip, and if not, and it starts to just go red again, then it is what it is. We've seen that happen many times over there. So, as far as the strongest sector besides the buyers, it was the Qs. So let's take a quick look at the Qs to see, how they look. It's one of the few sectors that are holding around the October lows. It broke a little bit below it and came back up. It's well above the flash crash lows. So, but just like everything else, it was a sell when it broke the 200-day right here, or it was a sell when it looked as if it failed up here, depending when you did it. And now it's below all the moving averages. So it's still, you have to have some skepticism. But now for the Qs, if you sold the close and you're like, oh, I sold the close, great, I'm not involved in this down open, et cetera, where could I buy it? This would probably be, support 1 coming in right here. Let me get there, which is somewhere around 108, and that would give $2 off this high. And then really into, so this zone, it really has to hold to be any good. If it starts getting below this zone, it's just going to be a little bit disheartening for anybody who's trying to buy a dip because they'll push you out probably before something happens, which would then not be so constructive because it would be so far off the highs, it would be hard to get back up there. So anyway, and then there was high beta. High beta, we were watching closely. Netflix came out with a solid report. It was up a lot, then went down a lot. That's what brought high beta down, and then it stabilized. Still needs a heck of a lot of time, but today down $2. Maybe Netflix is worth a buy. Here was a nice intraday pattern there that it crossed above, and now, see if it could hold this, which is about 106. So that would be from 110 to 106, $4 off the highs, and then even a little bit further into all these moving averages. So 104 to 106, in my opinion, has to hold. Otherwise, it's tough. Or if they push the envelope further down to where it broke out from, here you go. You look at the daily chart, and it had a big travel range. So these big travel ranges, you have to figure out where you could buy a dip if you try to. Here it held the 200-day, came back up, and still no traction above this descending channel, which I talked about, if you remember, in the recap 2 nights ago. I'm like, if it doesn't hold 115, 116 after I was, run for the hills or maybe even get short, and that's what wound up happening. So at this point, still considered one of the strongest stocks out there. So see how it acts, and maybe down, $2 or so, you can get a push. You know what? Let me, right now as I'm talking, I think the ECB came out with statements. So let's see real quickly what Europe is doing, because it was holding up, and we'll see if it's holding up still and helping our futures. So at least this is relevant. Let's see, DAX. What are you doing here, DAX? Okay, DAX is up 0.74. Okay, so it's up 0.75%. So the DAX is pushing up a little bit versus what it was this morning. So maybe it's helping our futures a little bit also. So again, with the futures lower, it still makes sense, into these areas, and see what was strongest yesterday. And the real obstacle would be can anything get above yesterday's high? Buying in the hole has been okay, or extreme holes, but you haven't been able to buy anything higher. So it'll be interesting to see if something can be bought higher. And I guess we'll watch Google. Google, if anything could, cross above yesterday's high and give a push, which nothing's been able to do. Google, that gave you a nice red dog reversal yesterday, perhaps it could do it above this 8-day moving average. It'll be the first one. It tried it here and failed, and now here, we'll see if anything could do it. And at this point, resistance here on Google is now 727. If it gets above and stays above, maybe that does help high beta tech a little bit. Amazon, it's been a little weaker than Google, but kind of the same boat, where you had your breakout failure to end the year last year, and then here was a nice little red dog reversal. So it'll be interesting if this could take out a pivot and rally back up. The 8-day, which has been the resistance this whole way, is a little bit closer to 590, and it's at 570. So is there another 20 points in here before people just try shorting it again? Facebook was a little bit back and forth yesterday. It took out the 200-day, flushed out some people, gave everyone a little early short, then came back up. Maybe it's down $1, it goes green. If you look here at the 5-minute of Facebook, similar strategy. This had a decent move off of this lower level here. And now I would say if it's going to be any goodish, you want to see it hold maybe this 92-ish area. From 95, yesterday's high, to 92, you're getting $3 off that. And then here is resistance. If it can get above 95 and push a little bit, maybe that'll show that there's a little strength in this market, that you could do more than just buy things on the extreme dip. The banks really weren't that much of a help yesterday. Goldman reported it tried to stay in the game and then just was down 3 or 4 and just got a little lift at the end of the day. You might as well take a look at it. If any, it actually had a pretty big lift and then came in. I guess. We'll see if this type of move is enough. Look how extended down it is. This has been a very bearish stock for multiple months already. Here is that head and shoulders top staring at everybody to start the year, with the left shoulder, the head, the right shoulder. Here is when it technically broke the 200-day and gave you a sell signal around 190. And then this was another sell signal below 175, and now here it is all the way down there. So the question is, just like everything else, can you get a little bit of a tradable bounce? And the first step for the bulls to get the ball back a little bit, to come from being down 45-0 this year, is take out the 8-day to move to the 21-day, and that's it. And here we are. We're in 2016. It's been a very harsh down move. The oscillators hit over minus 100. I don't think I've ever seen that yesterday. They had to push you as far as possible into 1 o'clock, wearing everyone down all day to finally get that bounce. Today we'll see if there's any kind of constructive action. I was thinking the best case scenario today would be like down 10 handles to close up 10 handles. That would be like a pack and fill type of day, which would be good for traders because you could play things from negative to positive and they can go green a little bit into resistance versus start down 10 handles, go down 30 handles, and then work its way back up. That would probably push people out of some trades and get a little bit more frustration in there. So, and here we are. It's Thursday. Did I say that? I did say that. It's been a very volatile week with huge ranges. Now listen, guys, for the past few years, there's been a lot of money made, from the long side, maybe not as much last year. And a lot of shorts have got the beat down from 2013 to 2015, because they all said we're way too high and, the QE project's not going to work. And they shorted, a trend that was above the 8 and 21 day for a multiple time period, okay? And they got blown out of the water. So if this is going to be a similar type of scenario in 2016 where we have a corrective phase, you don't want to blow yourself up buying too early and then getting stopped out. You don't want to miss opportunities on shorting some strength and then playing some breakdowns. So you got to change it up. And if you're not great at shorting, I know I've had some problems and I'm trying to deal with them. Make sure if you do buy, you buy strategically, in the hole in a way that's safe where you don't blow yourself up. And then at some point, you do get some, bounces that last for more than a day and a half that can go a week or two that you could trade. And then you got to switch gears back to when you hit that big resistance to perhaps make some money short and figure out what's next. And so with all that said, I hope you have a decent day. We'll see what happens. I'll see you at the recap, or I'll see you on the virtual trading floor. I'll see you on Twitter. And if you're in the Northeast, there might be a blizzard coming, but it is January, so it is what it is. Have a good one.